Good morning, good afternoon, and good evening. My name is Oliver Wieck. I'm the Secretary General of ICC Germany, and I cordially welcome you to our workshop on supply chain finance, which we are hosting today together with our valued partner, ODDO BHF. This workshop is part of the ICC Forum, The Future of International Supply Chains, Sustainable, Digital, Smart, which we inaugurated on June 16th together with Pamela Cook-Hamilton, Executive Director of ITC, two German State Secretaries, the CEO of Deutsche Post DHL, Frank Appel, ICC Secretary General John Denton, and Holger Biegmann, Chairman of ICC Germany. In case you missed the opening, you can find the recording of the event on our website. Supply chain finance is the first workshop of a series of workshops covering the various challenges and opportunities of supply chains in the 21st century. More than 400 registrations for this workshop is a clear indication that improving your working capital, freeing up liquidity through supply chain finance are topics of great interest. Other issues that we will cover today include cost reductions, the potential of digitalization, and new financing techniques. Today, you will not only get a unique European Asian perspective on these issues, but you will also be able to identify specific needs for SCF supply chain finance action in your specific companies. Ladies and gentlemen, I'm more than delighted that Florian Witt agreed to join our international forum as partner, and he also agreed to moderate today's workshop. Florian is head of the international banking, corporate banking of ODDO BHF. And before joining this bank, he was head of business management, transaction services, and financial institutions of Commerzbank and associated director of private wealth and asset management at Deutsche Bank, a man of great experience. Before I hand over to him, I want to thank the panelists for your time and dedication, and our dear participants for their interest in today's workshop and for joining us. Florian, the floor is yours.
Thank you, Oliver, and good morning, ladies and gentlemen. Good afternoon, good evening to those who have already some hours behind them in this working day. I'm greeting you from Frankfurt, the financial capital of continental Europe, financial capital of Germany. And I'm very honored, Oliver, that we can do jointly today this interesting and important contribution to your new format that you developed from the ICC Germany, the future of international supply chains. Once again, a warm welcome to all of you. I'm Florian Witt. I think Oliver has already said everything about me. Thank you, Oliver. I'm really honored by what you said. Yeah, ODDO BHF as a bank is a Franco-German bank, and that's quite unique. There are not that many people who try to build a bank between good friends, the Germans and the French. But Philippe ODDO 4 years decided 4 years ago to acquire BHF Bank, a German bank, and to merge it with his French entity. And I would say so far we have done quite well. Ladies and gentlemen, I think that should it be about speaking about ourselves. I'm very honored to have this very international audience in front of me, not only the contributors of today, but also the participants. I counted the nations that registered, so I counted more than 40 nations today from all continents of the world, and that is a clear success of this nice format. I hope that you and your families are well, that your teams with whom you're working every day and try to make this world a bit better, that your teams are also in good health. And let's wish to all of us that the pandemic will end soon. And I hope that also not only we as the economy, but also the politics will do everything that is possible. And the G20 summit yesterday gave some positive elements. The topic today received high attention, and it is not only since COVID-19 that we need to speak about international supply chains, ladies and gentlemen. I think before COVID-19 we already had the discussion about the trade war between China and the United States. We saw last month the block in the Suez channel. So we have a lot of things where we see that supply chains are today very important, strategically important for the production of goods in the world, and it's not going to end. The financial support in it is kind of serving the international supply chains, but it is also a very necessary element. That's why we have today the opportunity to speak about supply chain finance. And I'm very happy and honored to have very prestigious and renowned people amongst me today here in order to speak about it. Before I present you the audience, ladies and gentlemen, and the contributors, I would like to do some housekeeping. First of all, thanking those that are behind the scene and that you do not see. This is namely Dana, Bianca, Bettina, and Ziska from DVV Media, who have arranged and prepared this session and who are in the background helping us to make this a fluid and workable digital environment and seminar. The slides will be shared soon by one of these helping hands, by Dana, and the moderators will contact Dana in this regard. Finally, there's a question and answer possibility at the end. We would love to have a lively discussion after the contributions and some guiding questions at the beginning, and we have reserved plenty of time to respond to your question and answers. For that function, please use the chat, and it will be managed also by the helping hands in the background, and I will raise those questions then on your behalf and would be very happy to do so. Yeah, now to our audience. I have the pleasure to have with me today Christian Hausherr, who is the chair of the Global Supply Chain Finance Forum. He is also working for Deutsche Bank in the transaction banking division. Then we have Friedemann Kirchhoff, head of supply chain finance in Siemens Bank. Then by audio and not by video, we have today Rudolf Putz, who is the head of trade facilitation program of the European Bank of Reconstruction and Development, which have today their annual meeting in parallel. Rudolf is only by audio, but I can assure you, I know Rudolf for many, many years now. He is exactly looking like on the picture you have seen at the beginning of the seminar today. Then we have Jun Xu, Deputy General Manager and responsible for transaction banking in the Bank of China, and Hannah Nguyen, Deputy Director of the Digital Standard Initiative of the ICC. I think we have all the people we need to have a very fruitful discussion today about supply chain finance. Once again, finance is serving the economy, but it's also a necessary element. And finally, what I would like to share before we go into the seminar more deeper, I would like to share some general remarks about global trade and global trade finance. I'm personally very convinced, and I'm in the idea of our former Chancellor Willy Brandt, that global trade is helping to create peace and welfare on our planet. That the welfare distribution might not have been optimal over the last 20 years is a discussion we all have to face. It's a discussion that is about distribution between regions, between countries, but also inside the countries. And I think more and more we are realizing that. The importance of finance in the global supply chains is undebated. The question is, who is taking the role of delivering finance? Not that finance is required, but who is delivering the role? Is it purely the banks, or is it more and more also the non-banking financial sector? And finally, we see macro trends in standardization, in sustainability questions, not only green, not only ecological, but also social and governance related. And of course, the big question about digitization of supply chains and accordingly also of the finance of those supply chains. And I hope that today we can discuss it and we can give the audience here good answers to those important questions and trends. Yeah, and I have now the pleasure to hand over to Christian for the first contribution. So thank you, Christian, for being here today in your role as the chairman of the Global Supply Chain Finance Forum. Christian, the floor is yours.
Thank you very much, Florian, for the grand introduction words, also with the reference to the politics. We have prepared some slides, and I wonder if you could just pull up the slides we wanted to. Thank you very much. So the history of the Global Supply Chain Finance Forum started in 2014. At that time, I had the honor of joining a meeting. At that time, it was with JP Morgan, supported also by the ICC and other sponsoring organizations. At that time, it was the industry saw a need to harmonize the business when market participants spoke about supply chain finance. I have indicated the kind of confusion that was prevalent at that time in the market with these puzzle stones, because there were so many, there was so much terminology out there, and there were expressions like supply chain finance, supplier finance, confirmed payables, reverse factoring, approved payables, confirming, and all that, which created a lot of confusion with market participants, depending on who you spoke with, what kind of industry you were in, whether you were a finance provider, a fintech, or whoever. My personal view still is that particularly the expression supplier finance caused this initiative, because supplier finance actually was, particularly in the US region, referred to as the technique which we later called payables finance. And it is definitely not supply chain finance. Supply chain finance is a bigger concept we have described in the document we had then published in 2016. 2016, since then, the general terminology is out in the market. And in 2018, which was another milestone, officially the Global Supply Chain Finance Forum started its work. I was nominated as chairman since then, and since then we have followed up a couple of tasks and action items. I would actually now like to move on to the second slide of the presentation, where I would like to give you a very rough overview, a quick overview on the market stage on supply chain finance. If we do not manage to do that, I will just try to read it from my slide here. So a quick view on the supply chain finance market. There is unanimated understanding in the market that the annual growth is expected to increase by 50% until 2025. We all know there is a shift from traditional trade finance to open account practices, which in fact is supply chain finance. We can see that there is an increased understanding of supply chain finance and its benefits in the market. There is more technology out there, which I would say is partially driven simply by the pull. Everyone wants to use technology, and secondly also by a technology push, because the technology is simply available and it then can be used. We have seen that supply chain finance was very effective under COVID-19. A lot of companies were saved with supply chain finance being applied. And we have also seen from recent market events that there are certain standards in the market which are there for a reason. And the recommendation the Global Supply Chain Finance actually gives is to follow that rules, or rather recommendations. However, we also see an increased scrutiny in the public on supply chain finance, and whether that be with regards to the recent market events, whether it be on accounting, whether it be on the political dimension, buyers squeezing their sellers on long payment terms. There are governments questioning whether it's a level playing field. And of course, there's a general attention to supply chain finance with respect to the market events of the recent time. But all in all, I would say supply chain finance is on the rise. We see an increased interest from all sides, including the investment side, because also the investment companies like asset management are increasingly interested in getting into this business. If we can move to the next slide, I would just like to highlight one particular project we are currently working on, which is the update of the main terminology we have published in 2016. We are working on a third category, which we called advanced payable or advanced payments, and there will be three new techniques. One is the corporate payment undertaking, one is the bank payment undertaking, and one is dynamic discounting. These were techniques we had not initially discussed in the initial paper, but given the recent discussion in the industry over the past years, we saw a need to update this paper, and this is now what we are currently working on. It's a very challenging and interesting project, and I do very much look forward to the update of that main document. That will take some more time. We are currently working on the third technique description, the bank payment undertaking, and once all these techniques are done, we will do a general overhaul of that document. In the interest of time, I make a stop here and hand over to the next speaker. If you should have any questions with regards to the Global Supply Chain Finance Forum or its activities, please let me know. Thank you very much.
Yeah, thank you, Christian. Very interesting contribution, and I think the Global Supply Chain Finance Forum has done a great job in consolidating the definitions of supply chain finance. Something that I'm observing for more than 20 years, that there was the necessity and relevance for that, and I think you all have done a great work, and the importance of the forum will be growing, I'm sure, particularly towards regulatory stakeholders. Because I think all of us agree that regulation might still be a bit more adaptable to what supply chain finance makes different to other financial solutions in the world. Yeah, and now it's the turn to the next contribution. So Friedemann, very interested to hear from a group that is in the market as one of the leading industrial groups in the world. You are representing the financial arm of it, and I'm sure you have also very interesting things to tell us.
Yes, thank you very much. Thanks for having me. Very warm welcome from my side to the whole audience. Friedemann Kirchhoff, I'm responsible for the supply chain finance program within Siemens. And I'm delighted to giving you a bit of an overview on what Siemens has been doing in this field over the past couple of years. And this journey that we are on in regards to supply chain finance at Siemens is a journey that is going on since 2008. Back then, we started setting up a program. And if you flick to the next slide, I just briefly outlined on how our program is structured. If you could jump to the next slide, please. What we have set up, and this was basically driven by the demand of our customers for longer payment terms, was a solution that helps our suppliers to get early payments on their receivables, to get early payments on their receivables that they have from the business with Siemens. And those structures are all looking very similar. I printed it on the right-hand side, and also the benefits that both sides, the suppliers and the buyer side, can get out of that are nothing really new. It is about working capital improvement. It is about increasing speed of payments, improving cash flows. And it also helps to foster the relationship in the supply chain. So to strengthen the supply chain, to creating a stronger chain of reliable partners. And this is the reasons why we implemented that, why we adapted the solution back in 2008. And if you flick to the next slide, you will see that this was a journey. So we started 2008. And I mentioned that, but the first 4 years are really not to show on this graph, because it was a slow pickup. It was a long road to establish the setup, to connect entities, to reach out to suppliers. But in the course of this journey, we really reached out to internal entities to connect them to suppliers, so that over the course of time we really grow that program to a significant size. So in the past year, we almost reached 4 billion euros or euro equivalent in procurement volume, which has been run through the program. We have more than 4,000 suppliers connected to the program in 32 countries. We have more than 125 Siemens entities, Siemens companies connected to the program, and we have a model with our fintech partner that is able to cooperate with a pool of banks, and we are using major banks from North America, Europe, and Asia. We have more than 22 or more than 20 banks supporting that program, providing more than 16 currencies. So this is the road that we went. We have a global program. We are active, of course, in our key markets: Europe, China, United States, but also in smaller countries, in smaller markets. And this is the challenges that are for a big company as Siemens is: this global footprint, the global availability of such solutions, and the complexity of their own organization. And just to give you a few examples on the next slides on what are the challenges in setting up such a program, such a setup. That is to bringing the partners that are having a stake in such programs together. And of course, a key partner is procurement. Procurement is owning the relationship to the supplier, is owning the supply chain, and it is important that they are getting the right access to the tool set that supply chain finance can provide. There is a lot of communication required. Then on the other hand, there are those regulatory topics that you have to have in mind, which are on the one hand accounting treatments, on the other hand legal requirements, because those transactions are still under different legal rules depending on country. The rules of assignment of receivables are different in the countries, and so on and so forth. So this is something to pay attention to. IT in the last couple of years, and this is something which we observed with more and more fintechs entering the spot, IT became less a challenge because the newer solutions are easier to implement. Standards have been set up also with us. So this is something which really, where you really see advancement of the solutions. And the final partner is that you have to embed that in your treasury strategy, that you want to basically really see those benefits that for the buyer perspective can come out of such a solution, that you basically use them and align them with your general financing strategy with your treasury department. And just to give you an example, or to give you a statement on what we at Siemens consider as being the key element of our success. And this is basically also the final slide that I just want to end up my brief introduction, my brief overview of the supply chain finance solution. What we have done maybe different than others is that we set up from the start a dedicated team. This team, and maybe we at Siemens have the benefit that we have this financial organization, Siemens Financial Services, that is the in-house financing service provider for Siemens. And there we place the dedicated team for supply chain finance. And the role of that team is actually bringing the partners together, strengthening communication, basically talking to management, talking to suppliers, talking to procurement, train the colleagues so that they are aware of what can this solution bring to them. Also train the suppliers so that they are knowledgeable about those solutions and can really take an educated decision on whether it is useful for them or not. And of course, embedding those processes in the process landscape of Siemens. And we consider that consider that as a benefit, that you have a dedicated resource that is really doing this moderating role for all the participants and driving this program forward. And with that, I thank you. I'm interested to learn about your questions. I'm happy to be in this panel, and yeah, I'm looking forward to a lively discussion.
Yeah, Friedemann, thank you very much. Very interesting contribution. And we all knew that Siemens, as a big industrial group, is a very complex structure, and it's very interesting to see how you took over this and how you managed the complexity. When I see more than 4,000 suppliers, more than 125 connected entities, from more than 32 countries, 16 currencies, yeah, and to combine financial knowledge with tech knowledge, you know, very interesting to see. But to a banker, I also have to admit, it sometimes leaves also a bit of a trace of what could the financial sector directly, not only inside Siemens, but what could the banks have done better, you know, to contribute more to reduce or to manage the complexity of their clients. So maybe also something to discuss later on. Before we do that, the next contribution is with Rudolf from the European Bank of Reconstruction and Development, a bank, by the way, who is present and active in more than 32 countries. So not everybody may know, but EBRD has a very interesting trade facilitation program, which is not only wide but also deep. Very happy to listen to you, Rudolf.
Yeah, Florian, thank you very much for your introduction. Ladies and gentlemen, I am head of EBRD's trade facilitation program, under which for EBRD supports for development of trade and trade finance in more than 30 EBRD countries of operation. EBRD is an international financial institution based in London, and we have a mandate to support for development of market economies, particularly in former state-owned economies in CIS in Eastern Europe. But over the years, EBRD has increased the number of activities and the number of countries of operation, also including Mongolia and countries in the Mediterranean, including Greece, Turkey, Morocco, Tunisia, Egypt, Jordan, Lebanon, and West Bank, Gaza. Altogether, under the trade facilitation program, we have identified partner banks in more than 30 countries, and partner banks and non-bank financial institutions who provide trade and receivable financing solutions to importers and exporters and distributors in these countries. As you can see on this map, these are EBRD's countries of operation. They are not only countries of operation, but they are also shareholders of EBRD. And in all these countries, EBRD is represented by a local resident office with local bankers who help us to identify local banks and non-banking financial institutions who provide trade and trade finance solutions to corporate clients. Based from London, the trade facilitation program supports our partner banks, and we have identified more than 100 partner banks in more than 30 countries in the development of a trade finance business through guarantee facilities, loan facilities, and technical assistance. If we could have a look at the next slide, please. Under the trade facilitation program, we support our partner banks and non-banking financial institutions throughout financing for whole supply chain. That means from export production to transport, storage and distribution, and receivables. And we provide guarantee facilities, loan facilities, and technical assistance throughout the whole stage. We help partner banks and non-banking financial institutions to find clients. We help them to set up trade finance and supply chain finance programs. We help them to improve their operations, and we help them also to serve their clients better. And we help them to to train them that trade finance is not only financing transport and storage and distribution, but it starts already from the start of the export production up to the financing of receivables. And trade finance under our trade facilitation program comprises not only documentary credits, but it includes also trade finance loans, and includes also factoring facilities and receivables financing facilities, which we provide to local banks for on lending to local importers, exporters, and distributors. Next slide, please. As mentioned before, the EBRD is a development bank, and we provide our partner banks not only with financing, but we provide them also with capacity building programs. That means we organize trade finance seminars, we organize training on the spot or training online. We have partnered with international trade finance associations, including the International Chambers of Commerce, but also FCI, in order to help our partner banks in training their staff so that they can provide better services to their clients. And this training includes also supply chain finance, receivables financing, and factoring. In addition, EBRD as an international financial institution provides also technical assistance to the government in adjusting the legislation, and this is particularly important in countries where the local legislation does not yet support the development of trade finance and receivables financing. In many countries, there are no factoring laws, so EBRD plays an important role in providing advisory services to governments so that they can introduce factoring laws which help which support the development of supply chain finance by a clear definition of receivables, by a clear definition of the assignment of receivables, because in many of our countries, the assignment of receivables is still ruled only by a civil code, which is not perfect and makes the assignment of receivables very difficult. So summarizing, we provide support under the trade finance program throughout the whole trade cycle and comprising technical and merging together financing, technical assistance, and legal reform. Thank you.
Yeah, thank you, Rudolf. And I can only confirm from my own experience with EBRD, and I'm sure Christian from Deutsche Bank as well, EBRD is an important contributor into that region, and now also into North Africa, which is the Mediterranean area, where you have started to extend your program to a few years ago. But you're really an important contributor, not only of money and financial means, but what you said, government advice and the capacity building, particularly in banks and in some corporations in the region. So I think it's a very valuable contribution to smoothening the supply chain finance, and particularly in remoter markets in the world, and we all benefit from that. Having said that, let's turn our eyes to Asia and to China. I'm very happy that June is today with us from Bank of China, and we are with June's contribution today also a bit entering more now the technical part and the digital part of it before then coming to the ICC Digital Standard Initiative and HANA. So June, the floor is yours.
Thank you very much, Florian. It's an honor being invited to participate in this good webinar, and I would like to first share briefly the SCF trends in China. In recent 10 years, SCF has been growing fast in China. Thousands of enterprises, especially SMEs, have benefited from SCF. It is worthwhile mentioning that law and regulations are being structured to facilitate and regulate SCF development. For example, the new civil code has added a new chapter on factoring contract. Currently, the Superior People's Court is also conducting survey on the legal issues of SCF and may start the work of drafting judicial interpretations on SCF-related legal issues. And I have provided them the GSCFS standard definitions and documents issued for the course reference. To enhance the competition capability, SF providers in China are in the process of continuing innovation, and more SF techniques have been applied, and almost all the SF techniques in GSCFF standard definitions have been utilized, though the names may differ for branding purposes. And the majority of SF techniques focus on receivables finance type. And SF participants tend to be more diversified in recent years. These participants cover a wide range of entities, including banks, commercial factoring companies, SF companies, fintech, logistic companies, e-commerce companies, anchor parties of the supply chain, and investors. With the fast development of technology, we have also seen increasing digitalization practice in SCF. Various digital techniques have been utilized, such as AI, blockchain, IoT, OCR, big data, and etc. According to rough estimate, almost all the major commercial banks in China have developed their own SF online platforms, and banks' cooperation with third-party SF online platform has also increased significantly. Next, I would like to introduce two scenarios of SF platforms in China. This scenario is the cross-border finance blockchain service platform. The two biggest pain points for SF providers in China are the verification of trade sales and the identification of duplicate financing. To assist SMEs financing and help banks to efficiently verify the documents and protect banks from duplicate financing. In 2019, the State Administration of Foreign Exchange Bureau launched a cross-border finance blockchain service platform pilot program in several provinces with dozens of participating banks. The platform has effectively reduced the financing risks for banks. The financing information of various banks may be cross-checked real-time, and banks will be alerted if a company appears to be seeking financing from multiple banks for the same cargo. Now, over 70% of the companies being financed on the platform are SMEs. This scenario is a payable finance platform. As everyone knows, that the invisibility of the transactions between buyers and sellers remain problems in SF business for financial providers. In recent years, many banks and factoring companies in China have suffered significant financial losses due to fake trade or duplicate financing. The bank's supply chain finance platforms have its limitations because it is quite difficult to see the full trade cycles, including production and the shipment of goods. And this is just the scenario that an anchor party, just like Siemens, they established the blockchain consortia with banks or factoring companies as members, and all the account receivable finance is processed on the platform, and the AR account receivable assignment and confirmation are visible to financing banks, and which give banks a better comfort. And if you look at this picture, for an account receivable transferred, an e-voucher is created and may be transferred further to the second, third, fourth, or to the end-tier suppliers. And such e-voucher serves as a transferable negotiable instrument, and payable finance may be granted against such e-vouchers. And that's my brief introduction. Thank you very much, Florian.
Thank you, June. Yes, and to what you were contributing is showing once again that China as an economy, but also from a political point of view, is embracing digitization in a, I would say, much quicker way than other areas in the world. I mean, that opens also new horizons to the yuan becoming a more important currency in the world, which may be underlined by the developments we see at the moment with creating the digital yuan, the central bank digital currency, where China seems to be very much advanced compared to the US and to the euro. And it may also offer the Chinese government to have both a good currency regulation and a transferability of the yuan to where it should go to. Well, thank you so far, June, but I'm sure we will discuss that later on. But having touched the digital area now a bit more precisely from your angle, I think that's a lot also about standardization, because supply chain finance is a global product. So let's listen to Hannah, what ICC is currently thinking about consolidating the various initiatives and rule books that are written in private areas, in associations, in clubs, in fintechs, and how ICC considers the future of digital standards in supply chain finance. Hannah, please.
Thank you, Florian. Thank you, Florian. And thanks for having me. So greetings from Singapore. This is where the Digital Standards Initiative is currently located, and we are under the umbrella of the ICC. So as Florian mentioned, I think there's a lot of recent innovations to digitize the global trading system, but we recognize that an unintended effect has been to fragment the market and the platform used by different industries of the international supply chain, and also by the public sector agencies. So there is a clear need for a trusted, independent, and a neutral body to lead the effort to connect all these digital islands. Because until we're all connected, there is very limited value add between all different digital islands. So that's the reason why the Digital Standards Initiative was set up in 2020, last year, with the aim to unify the standards in global trade. And by doing that, we hope to provide businesses of all sizes, whether it's a global MNC like Siemens to a medium or smaller enterprise, with the clarity and certainty that they need as they transit from a paper-based world to a digital one. We recognize that there's been quite a lot of innovation, but at the same time, significant barriers continue to exist today. And even in the middle of the pandemic, where all of you, I'm sure, have already accelerated your digital technology adoption, and after a million Zoom meetings maybe, but there are still significant things that we find not optimal in the whole process. So for example, there's no single view, there's no clarity of the different trade processes and standards available, not even in one country, let alone cross-border. Also, there's lack of certainty, which is also what I heard from my fellow panelists before me, whether things like digital trade documentation and the transfer of it across border can be legally recognizable, especially when it comes to dispute. And also the proliferation of different platforms and technology solutions means that all of them are each bound by their own terms and conditions. They have different rule books, and not all of them will interoperate easily. And where standards already exist, there is still a very big adoption gap. So for example, the world has been trying to digitize the bills of lading for the past 20 years, but as of last year, a very small statistic appears, only 0.1% of the global trade in terms of volume is actually issued on electronic bills of lading. So this is a very suboptimal result after so many years of trying. So there's a lot of room for improvement over there. And last but not least, also as some of my fellow speakers already mentioned, there's a lot of technical integration involved among all the different solutions employed by different participants in the ecosystem, and this is very costly. So what is our role of DSI, and what are we trying to do? So what we are trying to do is to unify all the digital standard efforts across alliances, different industry forums, the standards development organizations, different companies, and governments agencies of different countries into one united global approach. So the first thing we have done is recently to release a website, which I would encourage you to check out, dsi.iccwbo.org. This is trying to disclose and bridge the standards development, which is the good work done by all the standards development organizations, and also the adoption stage for the international supply chain, whether it's B2B or B2G, and also the financing ecosystem. Secondly, we are championing legislative reform by advocating for legal harmonization. And this is something that also is also mentioned a few times today among the panel. So we are actively advocating countries to deploy the EC-Trans model law on electronic transferable records, which is the basis for all these international electronic title documents to be recognized. We're also working on the interoperability of the rulebooks between different platforms. We're working with harmonization of global trade standards, whether it's within one industry. So for example, container trade industry, are also cross-industry standards. For example, identity. How do you trust that the party you are dealing with digitally is the one that they said they are? And last but not least, underpinning all this, there are also ecosystem platform standards, which are like a utility layer. And this will help to reduce the cost of the technical integration, which not a single company in this world can actually bear, whether it's a big MNC or a small SME. Because if all you do is to connect one-to-one platform, you will never be able to connect with all the different platforms and solutions that your suppliers, your customers, your banks are all plugged into. So we need one single integration mechanism to make sure that all these platforms can speak to one another. Next slide, please. So very quickly, since we are mindful of the time, so just pick up a few examples over here. We are ramping up our advocacy engines because using the power of ICC, we're convening the different businesses and industries across the world to work on this project, and we are working with multiple partners in different areas. So just picking up a few examples over here. For example, we're working with the DCSA, which is the Digital Container Shipping Alliance, which covers 70% of the world's container market, to come up with a new standard for electronic bills of lading. It's a standard for industry and by industry. We're also working with GLIVE, which is working on an international standard for a consistent view of the legal entity within business-to-business application. And last but not least, we're working with Trade Trust, which is hoping to reduce the complexity of integrating different platforms. Okay, so last slide, please. Okay, so I'm just going to wrap up today with this slide, just a food for thought, why we think that 2021 is the year to push for adoption. Now, we have been all through a very difficult year, and although, as I mentioned, there is uptake in utilization, but there's still a lot of room for improvement. But the good news is that we have seen more parties coming up. People are becoming more united in solving these challenges. They come to us and say, look, we've been trying to solve this for years, but we can't do it alone. We need to do it with you and with other people. So that is the difference that we see in this year. And we also see that there's a lot of political will, as Florian mentioned at the beginning of this seminar. Everyone is united in seeing that this is a great enabler to help us to achieve our sustainability objectives. And we have a chance to close the trade finance gap, which is currently estimated at about $3.4 trillion, and probably is already growing in the last few months with the economic, still not recovering because of the pandemic, still raging in different parts of the world. And also for governments, there's a very powerful incentive by digitalizing trade, by facilitating business. They have a chance to close the VAT gap by modernizing the public revenue collection. And this will help with the post-pandemic recovery investment efforts. So with that, I end my presentation, and I'm looking forward to the Q&A session. Thank you.
Thank you, Hannah, and thank you for having shared this very important insight into the standardization initiative. The first questions we received from the audience are also pointing into this direction, and I'm happy to open now the question and answer session. First of all, quick view on how many people are currently participating. So we have more than 150 people from more than 30-40 countries in the world participating today. I also think it's thanks to the contributors that the 150 plus participants are more or less stable. So the people are not pulling off. the contribution. So I think we have interesting knowledge to share. And now let's discuss. I mean, considering what you said, Hannah, and also maybe to Christian, this question where I'm already integrating what two participants want to know. Considering the past, where supply chain finance, in my experience, saw some fragmentation from the banking sector, particularly in factoring and forfaiting, where we saw new entrants 20 years ago coming to the sector and having taken over what banks were not effectively and efficiently doing at that point in time. But considering that, how long do we need to wait until we see a real breakthrough of digital supply chain solutions? And what do you think will be required? I mean, the questions we have are, for instance, about what do you think is a legal requirement about it? Just take a bond on what has happened in Germany, not on the blockchain on trade finance, but and not on the blockchain of payments, but on the blockchain of asset custody. We have a law in place now. So we are seeing now, and we are preparing as a bank as well, in offering solutions that are blockchain based and asset custody services. But what would you think is required from in regard to the trade finance business to see a breakthrough of the various initiatives we have here? Is it only legal? The technical is something that you require from the banking sector. What is your opinion on this?
Okay, Christian, you want to start first?
Okay, then let me kick off. Thank you very much. Well, let me answer this question from a global supply chain finance forum perspective. The Global Supply Chain Finance Forum offers a conceptual framework for supply chain finance. Well, I could actually take it very, very easy and say, well, you know, it's just a conceptual framework, and we are very agnostic to the question whether you leverage technology or not. But that is obviously a very simplistic answer, and I'm not going to give you that one. As a matter of fact, I mean, when you look, for example, at a technique like payables finance, you can of course do that highly technology on a very high technology level, maybe even with blockchain. But let's face it, you can also do it on a piece of paper. It doesn't matter. However, there is a certain development and evolution in terms of technique, and the role of the GSCFF, as I see it, is that we provide certain buckets or categories that need to be looked at. It is then a second question how these categories are translated into technology. But regardless what you do, whether it's blockchain or digital standards on containers or whatsoever, a payable remains a payable, and a purchase order remains a purchase order, and a receivable remains a receivable. And that is what we define in the Global Supply Chain Finance Forum. And of course, we interact with initiatives like the DSI. The technology view is a very granular view, on a very, very deep level, which is relevant to practitioners on a technology level and an operational level. So I leave that to the experts. But we also have as a global supply chain finance forum, we also act as a kind of translator towards other stakeholders who have an interest in supply chain finance. For example, asset managers, rating agencies, regulators, who have a much, much broader high-level view on supply chain finance. And that's where we step in and explain them, look, this is basically the concept. And yes, it's technically resolved, and that is done by DSIs. The other role we also play, and that's my takeaway from conferences I participated in over the past years, is there are so many initiatives on the technology space. There's, for example, also, if you go into the whole e-invoicing space, there's a lot of activity. And I had the opportunity to speak with both sides, and I always try to bring these sides together, because in the end of the day, it needs to be one network that works together effectively. So this is where we are from a supply chain finance perspective. We provide the concepts, we try to bring parties together, explain where we can, and of course also support with our standards. But Hannah, I'd be actually really curious on your view on this question.
Yeah, thank Christian. I think I agree with you. Also at the DSI, we are technology neutral and also vendor agnostic. So we are welcoming all different kinds of technology solutions into this space, whether it's blockchain or not. And we do recognize that even though blockchain offers a lot of advantages, there still remains the fact that most, if not all, of the legacy systems are non-blockchain based. So we need to have an integration between the different solutions that different parts of the ecosystem are using. So that's something that we need to work on. And also to Florian's question on how far are we from that goal, I think we have seen a lot of positive, encouraging signals from different stakeholders, especially governments. I think we're very heartened by the recent G7 statement that put digital at the heart of the post-pandemic collaboration. And also I'm sure at the G20 and also at other intergovernment forums such as the Commonwealth, APEC and all that, we would see similar resolve from governments to enable a very conducive legal environment to make sure that technology and business can together have the synergy that they should. Yeah.
Yeah, thank you, Hannah. Thank you, Christian. Being a banker, I'm still a bit self-critical about my own breed and my own family. So, I mean, we sometimes ignored in the past already some technical trends. So I think the banking sector will have to do some intellectual steps in the weeks and months to come as well. Yeah, I see your point. Ladies and gentlemen, for the participants who would like to raise a question, please use the question function here in the GoTo system, and we will integrate your questions into it. I have already integrated again some of the questions, and I would like to raise this consolidated question to Friedemann and to June. Since the start of the pandemic, we are observing more and more quite severe frictions in the global supply chain, especially in the corridor between Europe and Asia. And it might be during the weeks to come even more complicated, while we see some more shutdowns in the Asian region because of the Delta variant of the COVID-19 virus. What can finance do? Or what do you think can finance do to smoothen those frictions, to help to avoid them? You know, how to bridge them? What do you expect is the role of finance here?
I think finance can bring stability because I think the first shot that we saw with the COVID was some disruption because everyone was not clear how much impact this has on the global economy. And then we saw, all right, we will manage, and markets calmed. And I think that is also what finance can bring to this situation, that we keep liquidity flowing, that we calm this supply chain. What finance cannot solve is limitations that we currently see, but it can give certainty to the parties that are affected from shutdowns, from limitations. But what we as an industrial organization currently see also, and what is affecting us maybe even more, is shortages in certain elements that we have in certain semiconductors or chips, that we see market shortages, which are of course driven by a shutdown, which you only can support limited with the help of finance, because we are well prepared to supporting that but still it doesn't help that much. Maybe for some suppliers, you can, with providing additional financial solutions, put yourself in a preferred position, which we at Siemens, of course, independently of the situations, try to do. But if you have a shortage in certain elements or in certain products, then finance can not really solve that because they are economically driven. That's at least my perspective.
I fully agree with Friedman. Actually, it's a very good but tough question. I will not say that finance would avoid frictions completely because of the limitations, but it does provide a critical role in stabilizing the global supply chain. Since the outbreak of the pandemic, according to a survey done in China among the enterprises, about 60% of the respondents consider that market demands and working capital demands were among the biggest pressure for them. Of course, shipping interruptions and client losses were also major concerns. About 39% of companies responded that they could only be in operation within 3 months with the current working capitals. However, for SMEs, the percentage is quite high, is almost 70% facing the shortage of funds, and over half of the SMEs said they could only run for 3 months. Therefore, financial demands are comparatively higher for enterprises and SMEs, and it's of great importance for SMEs to start production with the support of finance, so that the supply chain may be stabilized. Actually, after the breakout of pandemic in China, the various state agencies, they encourage the financial support for SMEs, including the services of supply chain finance, and they encourage the account receivables finance, account receivable pledged finance, and factoring, etc. So it's good to see that after the breakout of the COVID-19, SMEs financing demands have been addressed, and not only by the different countries, but also by ICC and other international organizations. We have witnessed here in China the increased supply of finance to SMEs in, and also some special policies tailored to satisfy the SMEs' demands. For example, the extension of the loan periods, and also the lowering of the interest rates. And I think that may be one of the contribution to the rapid economic recovery in China. However, to enable sound supply chain finance support, the policies, the laws, regulations, technology, techniques, and also the standards are very necessary to be in place. Considering the features of SMEs and the change of operation transition to digital channels since the pandemic, online supply chain I acknowledge to be the area requiring immediate attention. So we're looking forward to more progress in that aspect with ICC's efforts. Thank you.
Yeah, thank you, Friedemann. Thank you, June. There are more and more questions coming up, so I try to take over the momentum from the question and answer session. So, of course, and we were expecting that during the preparation of this meeting. Of course, we need to speak about sustainability in supply chain finance. Sustainability becomes ever more topic in global finance, not only the supply chain finance area. We have the green bond initiatives, we have pre-export finance have made green or social viable. We have ECA finance, so the long-term capex good export finance, where we have more and more ESG elements in it. So especially in Europe, but also when you read China carefully, you see also in China, the financial sector gets more and more involved and required via legislation to incorporate more and more social, environmental, and government standards. Maybe a question from the audience in this regard to Rudolf and to Christian. How do you believe supply chain finance will adapt in this regard? Which standards can you already see on the horizon that may develop into so-called master principles? What do you think will be definitely something that the financial sector and all contributors in supply chain finance, whether they are financial players or technical players, what can they not ignore anymore on this topic of sustainability? Rudolf, maybe as you are from the audio, maybe you start, and then I think Christian, you would be a great person to respond to this question from the audience as well. Seems that we have lost Rudolf. Maybe then Christian, you start while we try to get Rudolf back into the scene.
Okay. Right. So, I mean, ESG obviously is the topic which needs to be on every agenda of a discussion nowadays, and it is indeed a very relevant topic. The view from the Global Supply Chain Finance Forum is the following. The framework the Supply Chain Finance Forum has published is a description of what supply chain finance is. It tells you who are the acting parties, who is the client, who is the counterparty, what are the risks, what are the roles that are taken by these market players, what are the processes. These are the questions the Supply Chain Finance Forum answers. That is all not about ESG. It's totally agnostic to that. However, it is totally acknowledged that ESG is a relevant topic, and the Supply Chain Finance Forum and its affiliated sponsoring organizations have issued a lot of documentation on not only what supply chain finance is, but also how you should actually practice it. And here I'm referring to some documents we have published over the past years. One is for example, the market principles that was particularly focusing on accounting. There's the Wolfsburg principles which looks at KYC practices, and there is also a guidance the Supply Chain Finance Forum has published last year, which takes a broader view on credit risk. So these are our recommendations, and one of these recommendations obviously would also be the supply chain finance technique you are leveraging should be compliant with ESG standards, because otherwise it will not work, right? So you may set up a supply chain finance program with a buyer in the defense industry and a seller in, I don't know, a high-risk country, but you may want to look at that, whether this is really aligned against your credit appetite and the risks you want to take. And the same applies to all these ESG questions. When looking at ESG, and it was mentioned earlier, there are also governmental programs which try to push market players into into applying these practices. That's fair. I would say when I look at ESG, you have two options. You have either the carrot or the stick. A governmental program tends to be a stick because it forces market players into ESG, and then you have the carrot, which basically says, well, if you follow these ESG guidelines, you will get a better pricing, which is obviously the nicer way to do that. If you continue that line of thinking, if you want to offer nice pricing, Of course, there also needs to be the funding for that nicer pricing. And that then ultimately circles back to the whole investment angle, because there will need to be investors and funders who are willing to earn less if a program is ESG compliant. You know? So it's a very big picture we need to look at, and every market player needs to be satisfied. Let me put it that way.
Thank you, Christian. It seems that Rudolf is still offline. He's trying to reconnect. Just checking again. Rudolf, are you back? Not yet, but we know from our helping hands that we are doing everything to get him back on track. But I saw Friedemann sometimes nodding to what Christian said. Maybe you would like to contribute something.
Yes, because this is definitely a topic that we are looking at very, very intensively, and we started looking into that. And I recall it was one of the last conferences that I was able to attend in person, end of 2019, where I learned about the topic, and I thought, all right, that should be fairly straightforward, fairly easy to implement, basically to enhance the operations and the setup that we at Siemens already have in place. And basically to add an element, an ESG element that basically motivates suppliers to being or to investigating or investing into this field. What I learned then in the deeper analysis is that, of course, when you look at the ESG, that we at Siemens have already high standards to anyway do business with us. So that's why the S and the G element of the ESG criteria is something which we would not rate, which we say we do define our standards and you have to meet them to do business with us. And we are not having basically an incentive that you are compliant with governmental requirements and so on and so forth. So that's which took us on the journey to really move and look into the E element, and how can we then measure and make it measurable a certain behavior. And we are still in the process and looking at it. And there are a couple of e-rating agencies, EcoVadis, for example, which is probably one of the providers that has a large footprint, which is still rather small. The challenge that comes with that is that, of course, to making this measurable, you have to invest. It comes with a price, and the question is on whether those supply chain finance programs are able to embed the costs that come with making this measurable into this price element. If you issue a green bond, you're usually talking about a way larger scale, and therefore this definitely is more in balance. But if we are talking about tiny transactions, which we obviously have with 4,000 suppliers, so there are really tiny suppliers in that, then we still look for the metric that we can apply, which is not a full-fledged rating, that we then can use to embed such a solution to it. But it sounds easy. When you look into the details, at least from our perspective, it becomes more difficult. But it definitely will make its way, because the demand is there, the pressure is there, and you see already examples.
Mm-hmm. Thank you, Friedemann. Yeah, definitely an issue that will accompany us over the years to come. As a banker, I'm a bit, let's say, mentally challenged about what regulation, particularly in Europe, is currently trying to implement. Doesn't make it easier for the banking sector to find the right way. I mean, we even have a debate in Europe, you know, whether nuclear energy is green energy or not. As we all know, the Germans have a particular opinion on that, and that definitely the Germans think nuclear energy is definitely not green, while the French say, what's wrong about nuclear energy? It's completely carbon neutral. So, and France has compared to other industrial nations in Europe, a very good carbon footprint compared to Germany or Poland or Belgium or UK. So interesting debate to come, and then the financial sector has to find the respective answers to that. So I think this will will use a lot of our mental capacities over the years and months and years to come. Another question from the audience, maybe to June and Hannah. Central bank digital currencies, e-yuan. June, how do you consider the e-yuan to incorporate into global supply chain finance? What is foreseeable at the moment? You know, we know that the e-yuan is currently being tested with a peer group in China. Will it replace only local small trade and replace cash in China? Or do you think, and maybe Hannah can also think it in a more wider sense, because there are other CBDCs, central bank digital currencies, to be developed, do you think it will be incorporated into global supply chain finance as well?
That's a good question. Actually, currently, the digital currency is still in the process of pilot project program, and has not been used in supply chain finance. It's for commercial consumption usage right now. However, looking forward, we wish that could be utilized in supply chain finance because of its its security, and also it can be incorporated into the digital, the online supply chain finance platform, and it could be easier than the paper currency system. And we are looking forward, but it will take some time. Thank you.
Okay, from the DXI perspective, in our engagement so far in the past 1 year, we haven't had a lot of interaction with industry participants who tell us that CBDC is going to be something of a very big development in the trade finance space so far. Of course, this is something that we are still monitoring because it's, like June mentioned, it's an evolving space. So for us, we continuously engage with a lot of platforms, and many of them are blockchain based, and also many of them have their own crypto currencies. So definitely, this is something that we are watching, and we will be monitoring this area closely. Yes.
Okay, thank you. Then I have, we have 9 minutes left. I will take some more questions from the audience. One, I would say, question more pointed to the detail, but very interesting and directly raised to Christian from the Global Supply Chain Finance Forum. Receivables discounting and factoring are classified in your definition as receivable purchase category. Invoice discounting is a variation of factoring. But the question is, invoice discounting as a synonym of receivable discounting. So what, maybe you can explain what is the main difference for you between invoice discounting and receivables discounting?
Yeah, well, that's a very valid question. And in fact, from a conceptual perspective, I mean, in the Global Supply Chain Finance Forum, we talk about receivables discounting and factoring, both as invoice discounting or receivables purchase or purchase of invoices. It's exactly the same. You always have a service provider who purchases an invoice. You always have a client who is selling these invoices to the service provider. So from that perspective, there's absolutely no difference between these two techniques. However, there are differences, and when you look at the clients who are actually using these techniques, you see differences. And one difference, for example, is Well, I would say that I would roughly say that the main difference is that receivables discounting is mostly offered by banks to large corporate clients with a big portfolio of maybe even well-known buyers, and the commercial conditions may also vary due to the credit risk rating of the large seller when you compare it to factoring. Factoring business, on the other hand side, is a very relevant and important and widespread business in some countries. Europe has a very, very large factoring market. In fact, we have an own factoring association, which is a sponsor of the Supply Chain Finance Forum, the Factors Chain International. And we shouldn't underestimate factoring. It has a very relevant role. But usually the service provider, when you look at factoring, is not necessarily a bank. It's a factoring company, and the client base of a factoring company is usually not the big sellers, the big corporates, but rather smaller sellers who just want to optimize their working capital and sell their invoices to that factoring company. So there are the whole procedure behind factoring is a bit different from what is happening in receivables discounting. To close the circle, and I'm now talking about reverse factoring. Reverse factoring is also invoice purchase, and I always regard payables finance or reverse factoring as a bit of the other side of factoring, because what you usually look at when you set up a payables finance program, you want to win exactly those clients who use factoring, and usually you're able to offer them better commercial conditions due to the underlying credit risk of the buyer who's behind that payables finance program. So in the long run, you will likely see a trend of small and medium enterprises, not the very small ones, but medium enterprises moving from factoring programs into payables finance programs. Yeah. So this is how these techniques work together, belong together. There are slight differences, but these are very relevant. I hope that answers the question.
Thank you, Christian. In the remaining 5 minutes, let's try to catch two more answers on two questions from the audience. One is raised to Friedemann. You spoke about the complexity you managed in setting up this program. And I also remember what the person who's raising the question remembers, that you said we built a team that joined all the forces and all the elements. The question is, was this the main element of managing the complexity, or is there some, is this human element of creating a team the element, or is there also technology being an equally important element in it?
I think and I mentioned that earlier, that the technological setup with the solutions that joined the market in the past years became easier and easier with API interface and so on and so forth. The setup of a supply chain finance program is way easier, but the challenge remains that it requires communication, because there are so many different parties involved. There is the CFO having a certain interest of a company, the head of procurement is having maybe a different interest. Those interests have to be aligned. Then someone has to talk to the suppliers and have to bring the message across. And this is, in our experience, best moderated with some dedicated person. This could be someone from the finance organization. Ideally, it is someone from the procurement organization, as they have the direct interface with the suppliers. And at the end, such a program only will be successful if the suppliers are making use of it. And they are only likely to make use of it if they understand what the benefits are for them in it. And that's why this is the key element. The communication is the key element. We see that with a dedicated resource or with a dedicated team, you can manage this communication element way better. Technology in the start was the major challenge, but over the past 10 years, I think that became less and less of a challenge because of developments and new offerings of new solutions, fintechs that made this element becoming less important and way easier to adopt.
Thank you, Friedemann. And then the last question for today, for this session. And honestly, I have to say I like the question because it reminds all of us that supply chain finance, international supply chain finance, is something that is also managed around borders. So it's cross-border business. And the question that is coming from the audience is about, and I think we already touched it a bit, and maybe June, you can be a bit more precise again on this topic, what you can see from the Chinese angle, because I think that's a country that is pointing to that issue. Countries, particularly in the emerging markets, have to manage their currency and their inflation via the exchange rate, and that's usually why they have capital movement restrictions implemented. What do you expect, June? How will this change? How may it change technology, the whole setup of our international financial system that is also composed of IMF, who's helping the central banks, swap facilities that are existing? What do you expect, or what can you already see from a Chinese angle, and what capital restrictions and technology may change in the future? Very quick answer, please.
Last but most difficult question for me.
Yes.
Yeah, technology will, definitely drive the speed, and so the movement of the cargo, and also the funds flow. So in that respect, I think to some extent the capital restraints may be lessened to a little bit, but from a wider aspects, I would not say that the capital restraints will be greatly lessened just because of technology improvement. That will depend on the development of different countries. Thank you.
Okay, very precise and quick answer. Thank you for that, June. Ladies and gentlemen, the time has run 1.5 hours, very fruitful and thoughtful and detailed discussion. I would like to thank you. I would like to thank the contributors, June, Hannah, Christian, Friedemann, Oliver. I would also like to thank the helping hands in behind. I think very well managed with some difficulties at the beginning, but then very well smoothened further on. I'm also thanking Rudolf, which we lost for technical reasons, unfortunately, from the EBRD, but I know that he's very much turned towards the international audience, so please feel free to contact him by other means. You all know the participants who I also would like to thank, and we have still left a lot of them, and that shows the performance of our today's contribution. For all of them who would like to listen again, this has been recorded, and the ICC will send around the link where you can replay this audience. Ladies and gentlemen, I would like to thank you again. Again, I wish you all the best for your families, for yourself. Stay healthy with your teams, and let's make supply chain finance important and welfare generating ingredient of global trade. Still convinced that this is the best way to make our planet a better planet for all of us. Ladies and gentlemen, thank you and enjoy the rest of the day. Bye-bye.
Thank you very much.
Thank you.
Thank you very much.